Ladies and gentlemen of the crypto space, we are live on Tuesday, 11:29 a.m., October 6th, well into the month of October. And are things getting better? Are things getting worse? I don't know. All I know is I look at the headlines and I'm like, I don't know what the heck's going on. All I know is it's frustrating, it's concerning, and the appropriate word is risk. And that is our goal, and that is what I talk about. That is what we talk about quite often is the concept of risk and minimizing risk and maximizing gains and trying to protect what we've worked our asses off for by trading time for money. So we have traded time for money and we're going to take a risk? Hell no. I ain't taking no damn risk. I want to minimize risk, hopefully surefire bets. And that was a great talk yesterday about minimize risk, surefire bets that we're going to pay 10, 20, 30% almost day in, day out. It was absolutely unfair in many regards. So we got some really cool topics today. Let's see who's in the house. Angela's in the house. Iran, Captain Weber, my man, always a pleasure. Stelios, RR, Staff, got the crew. Yes. Today's episode, along with all episodes, are sponsored by Change Angel, non-custodial swap exchange. Stop depositing and withdrawing funds from dirty, centralized exchanges and start swapping. You put your asset in, you get the desired asset out. Not your keys, not your crypto. Trade from your wallet to your wallet. That's the way we do things around here. Now, bear in mind, we got BlockFi, we got Celsius, which bring to question a lot that's going to change in the financial system because that's clearly inconsistent with not your keys, not your crypto. That is a centralized organization that is doing exactly what Aave and Compound are doing. BlockFi and Celsius do what Aave and Compound do programmatically, but they do it using people and jobs and a company. They offer over collateralized lending. So that's why BlockFi and Celsius are really cool. So they're taking on the responsibility of the protocol, of the risk of the smart contract. Aave and Compound have the risk of the software, of the Turing complete software. If there's an issue, it's software that malfunctions. And that's why Aave, check it out, let's go over to the main screen. So Aave has the new Aave token, the lend to Aave conversion is well underway. And the biggest thing, what is the purpose of Lend and Aave staking right now? Aave staking right now is their security module. And this security module, we are by staking our Aave, we are given rewards. So right now it's a little less, about 9% per year, which is still a ridiculous amount of return as compared to our pathetic banking system. Um, and we are securing the Aave system. We are given this reward in exchange. If there is an issue with the Aave system, our staked value can be slashed. By how much? If there's an incident and let's say $10 million is lost, $10 million from the security module will be used to cover the issue. That is the whole purpose. So this is insurance. How cool is that? And that's exactly what this other thing I want to show you today is basically crypto options, smart contract options, which is insurance. Options are insurance. So how cool is that? And that's what BlockNet and Celsius handle. What you're looking at right here with the Aave security module, they handle it through traditional finance and traditional business means, probably by having their own puts. They're using maybe derivatives, Bitcoin derivatives, and other strategic instruments to hedge against downward price action on particular assets. You know, you can imagine from a business perspective what they've chosen to do to maximize their gains and minimize their potential losses, minimize their risk. Because clearly they've been quite successful. They've garnered quite the attention and they have raised a fair amount of capital. And they're throwing out some serious yield. Celsius and BlockFi are throwing out 6% plus yield on Bitcoin. Celsius up to 5 Bitcoin, you get 6% yield, and BlockFi 2.5 Bitcoin, you get 6% yield. Man, they should be paying me to talk about this shit. Ah, come on, baby, throw a little sponsorship action, BlockFi and Celsius. You know I love it. You know I maximize my gains, baby. Who else is in the house? Nathan's in the house. Stelios, do you know where I can get the highest API yield for my precious Bitcoin? I'm sure you meant to say. Yeah. You want so the highest? You want the highest gain? You're talking about Curve, but there's also risk associated with Curve. Curve is going to take risk in the form of the Turing Complete smart contract, but Curve is also going to give you currently. Check it out. Bum, bum, bum. 19% on Bitcoin in the form of a tokenized representation of your Bitcoin in paid in CRV, which unfortunately is getting obliterated. Now, Curve, I had a video the other day. Now, I absolutely love Curve. I love the protocol. I love the asset. Now, you got to be fair, and most people that are on Twitter are not fair with regard to their evaluation of an asset. Now, the price of Curve has been destroyed. It was falling wedge after falling wedge with a breakdown. Falling wedges don't break down. This is the most ridiculous price action I've ever seen in an asset. And if we go over to CoinGecko and we take a look at Curve, their market cap to total value locked is 4%. This is the lowest in the industry. If you go to Compound, look at that, 4%. You're at 47% for Compound. If you go to BAL, you're at 31%. Ren, maybe, I don't know if Ren will show a TVL. Maybe. Yeah, look at that. Market cap to TVL, 71%. And then you go to CRV, and they're at 4%. I think something's fishy here. These boys have been destroyed. This market cap is $42 million for an asset that is working to govern a platform that has $1.5 billion in TVL. $1.5 billion? Absolutely ridiculous. Now take a peek at this. Here's another one that's interesting. You go over to finance, go over to the DEX tracker. Now this is what's most fascinating about how unfortunate the price action for Curve is. Most ridiculous thing I've ever seen. So Curve is a duopoly with Uniswap. These are the two that stand out. Now Balancer's got a little bit, but Balancer's like, is like the Green Party or the Libertarians. But he clearly got like Republicans and Democrats going on. He got some serious Team A, Team B shit. That's pretty obvious. This is called a duopoly. You're talking about two outliers, two obvious disruptions. Now, as I've said before, it's very rare that ongoing disruptions are themselves disrupted. Now, because we're in such an incredibly nascent industry, the velocity of change in this industry, the crypto space is so incredible. There is a possibility for disruption to occur, and I kind of see that with Loopring. Loopring has has their L2 implementation of their exchange, which someone has created a swap interface on top of their exchange. Now, Loopring is also, per their most previous update, building out an AMM contract, which will facilitate the deposits, the management of funds by contracts, and not by how their exchange is how liquidity is provided to their exchange implementation. The AMM contract will behave more so like Uniswap Balancer, where you're depositing, you're making literally an Ethereum transaction to deposit funds into a contract. So What does that mean? That means basically L2 fees on an AMM swap experience. Yeah, so obviously, you have dollar, $10, $20 Ethereum transaction fees when you're using Uniswap. That'll be replaced with zero L2 swap. I mean, basically the only thing that this is missing is liquidity right now. Because if you want to buy Ethereum worth of loop ring, you're going to get it for a 0.5% slippage, and you're going to have basically no transaction fees because it's L2. So the only thing you're missing is liquidity. Uh, yeah, you can't buy 100 ETH worth of link. So it's missing the liquidity. Oh goodness, I mean, the loop ring has the liquidity because obviously they have this supply, but there's no liquidity for anything else. Oh goodness. So anyway, yeah. So loop ring, I got my eye on. I keep it up on the chart, but everything's getting beaten up. The whole point of today's video, really, until we digress, because that's what we always do. We love to digress. Is the dollar wrecking ball, baby. But we're going to talk about options and choices, and options as well as options like stock options. We're going to talk about crypto options. But loop ring's getting beaten up, and that's unfortunate because they have much potential. But bear in mind, this is why we have to be risk off, ladies and gentlemen. We've talked about looking at CoinGecko and understanding why we should be risk off, and we're still very much in that situation. If you look at the top 24-hour gainers, we are in risk off. We're EOS moving 10%. Fuck that. Money risk off. Risk off. Look at this. This is the top gainers are stable coins. YUSD. Uh, oh man, no. CDI, HUSD, USD coin. No. Don't gamble today. So I made a boo boo, and I thought I saw some chart action for Bancor, but since then it's got freaking destroyed. So this is why I don't gamble. Now I wasted some money, so I probably bought it right here, and it's down to here. I'm down to 10% on 5 grand. There's 500 bucks that went bye-bye. I'm gonna hold it just because I think I'm hopeful. This is risk versus reward. So Bancor is gonna eventually come out with their superior AMM implementation that alleviates impermanent losses. It's coming. They got investors back in July. You could find that documentation. Bancor investors July. Some Medium post here. No, that was their original. They did raise 153 mil. Who knows what they spent that on? But they got investors back in July. Bancor Medium, uh, July. No, that's April. Yeah, go to the Bancor Medium. All fails everyone. You go to Medium. Medium has everything. So then you go to the Bancor. Look, the V2 community call. We've been talking about V2 since June. Come on, this is coming. And Parify Capital threw them some money. They're probably talking about liquidity. That's how they're going to throw money. They'll provide liquidity to various pools to get the contracts liquid. Provide liquidity to the contracts, license to say. Yeah, so that's why I've been in and out of Bancor. And man, if you look at that chart, if you zoom out, always take the bigger picture. Um, that's a serious uptrend. And on the daily, uh, what you want to see really for like a very safe type of time to take a position is where the guppies start to turn gray. So they really turn red, obviously. So you want to see horizontal price action, which would lead back into an outbreak scenario where you see green. I mean, this was 1,000% run, guys. This was just serious dirty money. Um, but what I see here is basically a horizontal 200 EMA, which is nice to see. So as this 200 EMA, if we have continued horizontal price action, the guppies will start to turn gray again. So that'd be nice. But anyway, I'm just going to hold that and let's see how much it loses. Watch, I'm going to lose 25%. I'll lose 1,000 bucks. That's no fun. But I'm out of basically everything else. Not touching Kyber. This thing just is blood red. Um, Len, look at everything's taking a push down. Look, why is everything taking a push down? Bum, bum, bum. Anytime you see negative price action in any space, be it equities or the crypto space, just go over to the DXY. Oh, but hmm. So DXY down. So watch, you have to look at the pennies. So here's this is your bearish action in equities in the crypto space today. Is literally this green price action. How pathetic is that? Because that's what does it. That's all that does it. The dollar, everything is basically inversely correlated to the dollar. That's just the way the entire system works. Who else is in the chat? We got David in the chat. Digilight is 5 o'clock somewhere, Noah. I wish it was 5 o'clock right now. Big Daddy's tired and doesn't want to go back to work. Are you trading into DAI when you take profits? No. So this is a great question, particularly with regard to protection. Um, You know, I wanted to show you guys this option. These are really cool. These are basically crypto's smart contract driven stock options. So you can sell puts. So if you have, Ethereum at 340 and like this is the ops, you're selling someone the right, the option to sell at 360. So clearly, the current price of Ethereum is less than 360. So if October 30th, if it's less than 360, they're going to exercise the crap out of this. So that's why you're going to get such a high return because there's a high likelihood that the person who buys this from you is going to exercise. And that's the way options work basically in the legacy financial space as well. There you could sell options, sell puts particularly as protection. So this is really cool. So I'm likely not going to get too aggressive with protection. And when I de-risk, I tend to sell into Bitcoin predominantly. And I'm not a fan of trading in and out of Bitcoin between stablecoins and Bitcoin. Now, that's probably it's probably important to clarify that I'm probably not the best at protecting Bitcoin losses, like trading in and out of Bitcoin. I'm not a fan of centralized exchanges, so I'm not a fan of spot trading Bitcoin. Um, if I've traded Bitcoin in the past year, it's been vis-a-vis DeFi, where I've taken Bitcoin and I converted to wrap Bitcoin or Rent BTC more recently, and I would use that to swap in and out with other um, uh, Ethereum assets, ERC20s. So maybe I haven't been the best at protecting gains because my gains are denominated in Bitcoin. So if Bitcoin takes a hit because the dollar decides to run up, I mean, this is a falling wedge, ladies and gentlemen. This is a bullish pattern. Now we'll see what happens because look, you take a look at this chart and then you take a look at the headlines. These boys work the opposite. When these boys, all the headlines are about stimulus. That's designed to crush the dollar. When the value of the dollar goes down, the value of equities inflates. The value of crypto will inflate. The value of gold will actually go down. Will go down. Gold tends to go proportional to the value of the dollar. If the value, it's very complicated. This is where you want to watch people like Stephen Van Meter and Brent Johnson. You find Stephen here, much smarter than myself. I followed him recently. Meter, Stephen Van Meter, not him. No, that's not Stephen Van Meter. Let's find him. Guy's got to follow this guy. You got to follow the macro boys, uh, the macro fiat boys, because that's the only way you're really gonna understand what's gonna play out with the crypto space as well as the equity space. I mean, obviously Michael Saylor you want to follow. Rand Paul, I just want to keep up with these boys. Got to follow TikTok investors. Absolutely hilarious. Got to follow Tyler and Cameron Winklevoss. Van Meter, where is he? Van. Oh, I'll find it and I'll bring up his Van Stephen Van Meter. There you go. You want to follow him. Very, very smart, smarter than I could describe uh, uh, macroeconomic fiat. It, yes, the Bond King. That's right, Igor. Smart boy. If from one day to the next the price of the farm token drops 50%, doesn't mean the next day I will get yes. Yes. That's exactly what it is with regard to curve. So curve, you're getting your yield derived from transaction fees. So as the transaction fees go up, you're going to get more, and so your VE curve yield is a portion of the total daily transaction fees denominated in curve. So as the volume goes up, you're going to get more returns, more proportional returns, how much VE curve you hold relative to everyone else. And therefore, on the open market, that the value of the transaction fees are going to be used to purchase curve from the open market. That's the way this yield works. But obviously, as that curve is distributed and the value of the curve decreases, you're going to get less gains until maybe you lock it back into VE curve or the value of curve starts to appreciate again. So this is obviously a very complicated calculation, but this is where curve is underappreciated. People are buying curve expecting it to go up in price, whereas I bought curve and locked it into VE curve, and I'm getting $5,000 a year. Now, if curve stabilizes, if curve literally gets cut in half again, if it loses another 50% of its value, and I'm earning $2,500 a year off a $13,000 investment, that's a ridiculous return, yearly return. That's double digit interest. Come on, guys. The people running around talking about curve getting destroyed, and because they're looking for 1,000% gain on their crypto asset, but we're talking about 76% yield. We're talking about compare this shit to a bank account. There's something's wrong with persons in the crypto space complaining about this. It's not just spoiled and untitled. These are the types of persons that don't have investment experience, and it's just wrong and it's unfair to innovators like the developers of this platform that have built very sophisticated smart contracts and have built an entirely pretty much decentralized governance system, which is revolutionary compared to the way companies and historically structured organizations are managed. This is revolutionary, and come on, this is it really needs to be seen for what it is. This is spectacular for having been launched this year, and the nuances and the subtleties of the way this works being started to be ironed out this year. If you go to the Dow, and if you go to gov.curve.fi, you can see what people are talking about. And if I had more time, I'd participate more there. But if you go to the Dow, you can see the open votes. Come on, people are voting. This is incredible tech, guys. Incredible. And this has just started this year. Just started this year. Sam says, do you use Nexus Mutual to insure your dark nodes? No. Um, yeah, I guess that's a risk reward, and that's the whole point of insurance. And so I'm not currently insuring my dark nodes. I'm also not currently insuring my curve position. Maybe that's a maybe that's a mistake. Um, I don't know, but this is all part of our learning experience and our journey through handling uh, our financial well-being. We have to either make mistakes or have or and learn from them, or we grow and we have wins. And I sure have a fair amount to lose here. Put a 53 chip in Bitcoin denominated in their REN pool, um, which earns me, if you go over to the Dow, you can see the output. This is probably about 24 hours worth of yield. It's about 82 CRV. And I also have some vesting because I provided yield, I provided liquidity to Curve back when Ren first came out. So these they owe me another 65 here. And bear in mind, because of the VE curve I have, I also uh, they would be getting yield from here. So they have 500, $500,000, $600,000, give or take, that has been accrued for the last 17 days that has yet to be used to purchase Curve in the open market. So bear in mind that could change everything. Well, because right now, VE Curve, the portion of the transaction fees designed to purchase Curve from the open market is not currently purchasing Curve from the open market. So this is actually very meaningful. Claiming is not yet available. The smart contract that will be used to take 0.02% of all transaction fees to purchase Curve from the open market is not currently in operation. So that's going to be a serious deflationary pressure or serious supply disruption. So people using Curve will literally be contributing to Curve being bought on the open market. Now, if anything is going to turn around the price action for Curve, it's going to be when that smart contract gets implemented and starts to execute. If all of a sudden there's, 100, what is that? Let's take a look. Um, let's go back. So 17 days. Well, let's do it this way. Let's say let's do the average if total pending decides to. There's 580,000 for 17 days. So that's 17. So 34,000. No, total pending distribution times two. So it's 34,000. So this smart contract, once it's executing, $34,000 worth of Curve additional will be bought per day, literally by funds acquired from people actually using the platform. So that will affect supply. And that'd be nice to see really a bottom on this because this is just, I'd love to see anything bullish on the Curve price. It really deserves it, guys. So pellets, thoughts on XDAI, big deal. It's an L2 solution. Chico talks about it much better than I can, but XDAI is a big deal. It also had a massive run up. And what are you going to take? A speculative position? So this is where we're at. And this is really where my mentality is at, is whether the question really becomes whether to take speculative positions in assets or search for yield. And as of right now, me merely looking at the CoinGecko top 24-hour gainers, I'm in risk off. I do not want any speculative assets uh, unless they're really sure bets. Now, bear in mind, and clearly I'm a hypocrite in some regards because I took the Bancorp position. Um, so you want to be, for me, the vast majority of my portfolio is risk off. How much am I in Bitcoin? I got to be like 80, 85% Bitcoin right now. We're earning 7.5 of that's earning yield from BlockFi and Celsius, 6% yield, and then another five of them are earning 20% yield from Curve, and obviously there was a position placed. I wanted to own a part. So VE Curve is I own a part of the transaction fee revenue. Absolutely incredible what you can do. So Curve created a way where people could purchase a portion of the transaction fees that are generated by persons using the platform. Oh, that's a hell of a philosophical concept right there, ladies and gentlemen. So XDAI is a big deal, but it's a speculative position. Do you have an opinion on cream finance? More speculative, 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 speculative. APY, speculative. Well, the Curve asset itself, speculative. Maybe I don't have an opinion on Curve participating in it. Now, it took me a fair amount of time to come up with uh, the moxie or the balls to take 5 Bitcoin and throw it into Curve again. Um, now, there's risk, and this is where Nexus Mutual comes in. There's risk associated with these smart contracts. There's risk associated with the Ren smart contract on the WBTC platform. Bear in mind, these risks are being alleviated as time passes. Ren is proving itself. As you look, see its consumption is just up, up, and up. Absolutely incredible. It's just straight up, straight up. And then WBTC, and obviously the recent announcement of the link um, liquidity verification or collateral verification. So there was that announcement between Ren and Link and Ren, and all these things help to alleviate concerns, and that'll all as these concerns are mitigated, more consumption of the platform will occur. So just like me, my concern was alleviated, or to some degree, and I actually chose to participate in the platform. And this is what will happen with more people over time. And that's what I bought into with the VE curve position. I bought into a speculative position that the daily volume will be $680 million and the daily deposits will be $10 billion. And bear in mind, look, a daily volume at $680 million, and I'm getting 700% per year. So come on, come on. So 700% per year, and what happens? All of a sudden, everyone's like, oh, I got to buy as much curve as I can because that's huge returns. And guess what happens then? Guess what happens to the damn curve price? It's a freaking rocket ship, straight up, from 60 cents to $6 to $60. Come on, so people, um, you got to look at the platform for what it is. Where the whole market is susceptible to the dollar wrecking ball, and the whole market is in risk off. But when you know what happens when the market is risk on, when the market is risk on, this daily volume next time is going to be huge. This daily volume this previous time was $150 million a day. And the fact that these deposits are still $1.5 billion, this is exactly what I'm talking about with regard to what is DeFi. Not what is DeFi, what is DeFi. DeFi is real. And these yields are real, and these trading things are real, and these money Legos are real. You know what's not real? Freaking yams and other garbage and sushi. Well, sushi was a vampire attack, but that's another story. But the point is, all these rug pulls you hear about on Uniswap, this is garbage. But this stuff is real. Aave is real. Lending and over collateralized lending and the power of these smart contracts, this is real, guys. So what you really need to do is sift through the bullshit, minimize the crap out of your risk, maximize the crap out of your yield when you risk off, and take strategic speculative positions when you risk on. And I told you guys how to find that, and you'll see it when you go to CoinGecko and you hit the 24-hour and you're like, whoa, everything is 20%. And when everything is 20%, that's okay. Now that's when you start to play with the money. And that's when you get 20% rips on 50 grand for 5 days in a row. So you're right, Jared. You're hitting. So this is the whole point of really the narrative that I like to talk about. Risk, reward, minimize risk, maximize reward, risk adjusted reward, really. So yes, I am speculating on CRV. So bear in mind, overall, I'm speculating substantially less than I was. So I'm 85% Bitcoin, give or take, right about now. Whereas back in July, June, maybe 30, 40%, 50% Bitcoin. It was much more value was placed. I was running around with 20, 30, 40 grand with a Bancor that was running at 20% rips on a daily basis. At one point, I had 20,000 synthetics, 28,000 synthetics at one point. And so I was much more risk on. So relative to that period of time, I'm very much overall risk off right now. And that's really the sentiment that I get, considering what the dollar is doing, considering what these Looney Tunes are doing in government, Minucci Bucci, and the printing press coming up with another 1.6 from the Republicans, another 2.2 trillion from the Democrats, and they're fighting it out over $600 billion. Whoopie fucking do. You're already talking about trillions of dollars. You might as well print $10 trillion at this point, which is probably along the lines of what Jerome Powell wants to do. He's like, there's very low risk of overdoing it. So come on, guys. Print 5 trill, Light the stock market on fire. Crypto will go to the moon. Everyone will sing Kumbaya, and we'll be getting 6% from BlockFi. Oh, never spread too thin, never go all in, Jared. That's the bottom line. But that's more of like a risk. Is that a risk on position? Yeah, that's more of a risk on type of thought. When you are risk on, you need the proper portfolio balance. If you spread too thin and stuff's popping off 100%, you're going to miss out on some serious gains. And if you go all in and you get a 30% drawdown, you're going to do some serious losses. So that's a bit of an art. Never spread too thin and never go all in. And no one could tell you what that is. And that's just something to keep in mind when you're looking at how many assets you have, how the overall market is, and how you feel. In the end, as you guys are all developing your own individual investment strategies, this all comes down to how do you feel about the positions you have, how they're spread out, how many you have, so on and so forth. Anyway. Um, yeah, that's right, James. The future is risk. Listen, Buffett says you don't take any risks, there's no gain. And that's the truth. But there's also time to take a risk and there's time to be defensive. And then there's always the time to weigh how much risk you're taking and how defensive you are. So there's all these dynamic considerations in how we manage our money. We manage our money. We don't give it to someone else to manage. And today is the day, if you're not managing your own funds, and the odds are most of you are watching me, manage your own shit. Stop giving it to schmucks. Manage your own shit. You take care of yourself. That's how you win. Or at least that's when you win and you managed it yourself. That's how you really win. And that's satisfying, guys. If you have the capital now, you can go risk off. The problem is that most of us are in the start trying to make the capital, so we try to speculate. Yeah, but you can't speculate now. Now's not the time to speculate. It doesn't. That doesn't matter. Um, you want to spec if you got 1 grand or 2 grand and you're trying to make money, you're taking way too much risk right now. Now is not the time. Like watch yesterday's video. I showed CoinGecko from Wayback Machine back in July, June, August, and you could go back. You could go back to May, probably, and probably end of March. Look at the Wayback Machine on CoinGecko, and then filter it by 24, and you'll see what I'm. You'll see it. You'll see exactly what I'm talking about, Stelios. This shit was 20%, 30%, 40% gains left and right, back to back. And all you had to do was pick the assets that were ripping it over and over. Check this out. I got to end the stream. It's 12:06. But if you look at this, you look at Ren on the 4 hour, the daily. Look at this. And then you go over to, let's take a look at Len, guys. Len on the daily. I mean, this thing was ripping 20%, 20%, 20%, 20% day in, day out for months, guys. That's the time you turn your 2 grand or your 1 grand or your 500 bucks or whatever you're playing with. 500 bucks, 20% into 600. And then to 800, into 1,000, into 5,000. Before you know it, you turn your 500 bucks into 10 grand between March, April, and August. September hit, it was risk off, and that's what I was saying from September on. And that's how you do it. And I know it's you turn your 500 grand, $500, you didn't turn it into 500 grand, and you can't retire, but you made hundreds and hundreds of percent of profit. And you're not going to do that well, I mean, you kind of can do it nowadays in the equity space because this shit is just a Ponzi scheme. Look at this. This is the recovery. This is March, the March crash, and then the recovery. This looks like the crypto space. It's the most ridiculous thing I've ever seen. This is not how stocks move. So it's basically just the same thing that a bubble. It's a bubble. What else? What does this look like? This looks like look at Lend. Boom, straight up, and then well, Lend did really well. It did not retrace do a full mean regression as I talked about. And then Ren is just one of the most incredible assets to look at. It did a full mean regression, one heck of a run up. I was up 1,100% at one point. Absolutely incredible. And if you guys are with that 500 bucks, now's not the time to take the risk. You wait, and then when the time is to take the risk, you'll see it. It's obvious. And then bam, 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 bam. 20%, 20%, 20%, 20%, and it'll happen for months. It won't be days, it'll be months. And this is the same thing we saw in 2017. It was months of 20% rips, 20% rips, 20% rips, 20% rips. And that's it. That's how you do it. Don't take the risk now, that's how you lose it. That's how you take the 500 bucks and you gamble it and you turn it into not 500 bucks. Ladies and gentlemen, thank you everyone. 12:08 p.m. October 6th. It's always fun. Best time of my day. I thank you so much for joining me. Smack those thumbs up. Tell everyone to subscribe. Let's get some subscribers. Let's have some fun. Let's help people. Let's help ourselves. Help ourselves to help other people, or help ourselves via helping other people. Because the more we talk about this stuff, the better we'll get with it. And that's what I like to say. I talk about this stuff because it helps me digest my own ideas. And by doing so, hopefully other people will benefit as well. Thank you all for joining me. You all have a wonderful day. See you tomorrow. Peace.